Hey guys, Rajiv here from Financial Hub India. Today's date is 19th of June 2018, and I'm back after a week of holiday for the Eid. In today's session, I'll be discussing about some reversal signals, some reversal signs, you can say, based on understanding the price action context going on as well as the volatility seen on the chart. So this is Divis Lab, and somehow you can see after a round of sell-off here, we are now reversing here, right? So a few price action context and volatility thing to understand the charts in a better way in terms of price action. So here, if you see from the sell-off area here, you have a strong sell-off and then a strong pullback, then strong sell-off. So both the ways, even though this looks like a 50% retracement, but if you see the volatility in the market, we can see good amount of buyers are present here, along with the dominant sellers here. Again, sell-off strength is seen here, but we can as well see some buying strength as well. And right after the buying strength, we can see the sellers coming back again in the overall downward trend in terms of the lower high. So the selling pressure is seen much heavier here, right? So in terms of volatility, we see good amount of buyers and sellers in here, which should not be a good sign for a downtrend. I mean, if you want a downtrend to to sustain for a longer period of time, then we don't really want to see the buying strength this much here. This is a good amount of buying strength. I think for around 2 to 3 days average, the buyers were sustaining here. That's what we don't want to see basically in a strongly downtrending market. To understand the order flows in there, if you understand the order flows of the buyers and the sellers in the market, then a dominant selling market, a dominant downtrend is a downtrend where the buyers are really struggling to go up, and they don't have much rooms for the push up in the downtrend generally. But here we don't see that scenario here. But anyhow, in terms of lower highs, this is going on. But do you see a difference, a shift of the momentum or the volatility happening here, and the volatility started happening here? So why does it happen? You see the volatile swings over here, but suddenly we started moving with non-volatile move. In terms of non-volatile moves, in the sense, if you compare this momentum here and this momentum here, you see more participations of the buyers and the sellers in both sides, but here that participation is reducing, right? It's very much reduced here. So why does it happen really? Whenever you see such kind of scenarios, you get ready for a reversal in most of the scenarios. All right. So it's like you're running the car in a speed of 100 in the expressway, and then there is a turning coming here, and what do? Generally, you slow down on the turning, and then gradually you turn your car and then zoop the next momentum, right? So usually when you see the volatility shift like this from too much volatile swings to the non-volatile swings, then you need to be serious about the shift of the volatility, which shows you the shift of a trend in most of the cases. All right. So when we see these kind of scenarios, then from here to here, we are now getting ready for a possible upcoming reversal. But at the same time, I want to see one more thing. Let's go to 15-minute time frames. There are some other there's some other price action context, price action scenarios also you can see here in terms of the reversals basically. Look at here. So price coming down here, and then okay, the swing was going on in terms of the lower high here. So coming, but if you see the big swings and the kind of the kind of swing, the kind of lower high swing breaks were happening right from here to here, then you will get the hint basically. You'll get the hint that okay, in terms of the context as well, price action context as well, we can understand that the shift is happening from down to the upside in the coming market, in the upcoming market basically. So the shift is seen in here. If I draw the big swings, that is one is here, second is here, then third is here, right? Goes up to here as well, the overall swing. So what is the difference? If you see the low breaks here, price goes down, and break the low, and there's a follow-up sell-off here as well. Goes down, break the low, and follow-up sell-off. But here, this was the biggest swing in last few candles. You see the last few market sessions. This is the biggest swing basically. So we can assume one thing is that from here to here, we don't see much kind of buying pressure, much kind of buy push towards upside, isn't it? And there is more selling pushes we can see, more selling strength you can see in terms of the candles as well, right? But this is the first time after this 1, 2, and 3 low breaks. This is the first time we can see a big corrective swing up, which is somehow, it looks like, okay, we had a strong sell-off for quite a long time, and then there is a possibility that we are really booking some profits and all those things. All right, since this is the first time you got the first pushback up. So the first pushback up, the bigger pushback up after so many smaller pushback up should hint you the first sign of reversal again. Okay, now the selling pressure is getting for a hold. It's pausing down gradually. And then what the market shows us, after the break of this low, here, do you see the price again don't sustain, and it gives one more big push up. All right, and then go ahead, price breaks this low again, it gives one more big push up, and this push is much bigger than the prior all these pushes. All right, and then what happens, price again push back down, but this time it even doesn't break the previous low, and zoop, goes up. So do you see gradually what's happening? Gradually the distance, the false break distances are reducing, isn't it? Here, you see, it breaks the previous low here. The price breaks the previous low here. This was the distance here covered. The sellers were able to reach up to here. Next time, price breaks the previous low here again. And now this time, almost half of the last break. The sellers were able to reach half of the last break. And what was the prior condition? What is the price situation actually? So this gap was much larger. The gap reduced in here. The gap reduced in here as well. And this was so powerful here, it even doesn't break the previous low. Almost a double bottom here. Here we go up, and then which is the area where every time price goes up after a bounce, which is the key level basically where the price was really stopping. That was a level in here. So how I mark this layer, based on these areas, you see the price was stopping here, then false break, and price again coming back up here and stopping on this support area, price again coming back down here, false break and stopping that area, price again breaking out and pull back and goes up, coming back down here, pull back and then break down, and again price fails to go down and go up, pull back and go up, right? So when here you see the price now is getting, the buyers are now getting more aggressive now, even though they are not even breaking the previous low, and then price coming back down, and where from it, from which level the price really turned up, the same layer from where the buyers were really taking chances earlier. All right, and then this was the scenario here. So let's see, we are waiting. Now see, this is what we say price action context. Now once the context is ready in the hourly time frame, we go back, we see the downtrend was there, then these reversal signals were there. So the entries, I mean, it's not a good idea to go for an entry over here in this support level, but the thing I discussed is reduction of the false breaks here. And this time the price is so aggressive that not breaking the previous low. This makes me more sense to go ahead for a buy trade on this support area. Otherwise, this support area, this key level is not much good level to trade for me. But looking at the price action context happened over here, now this support layer should be giving priority. But now what is happening? Now the price is, we have a zone over here overall, you know, so we have a zone over here. For me, it came down. It shows us the reversal thing, accumulation and distribution, everything happened here. It reversed its momentum towards the upside here. So for me, I'll be tracking down this level. And here also you can see it goes up above the key level of resistance. This is the overall key level zone. Then price come back down here and goes back up again. All right, so for me, till the time price is not falling below this, I'll be looking for buy signals. I'll be looking for buy trades in here. All right, so hopefully you understand what does mean the price action context, and it's not the key level we trade exactly. It's the price action context, the overall scenarios we trade. The key levels are the tools to get to just enter into the trades. Now that my price action context, my overall scenario, my overall picture is created here. Now I know, okay, I'm supposed to buy it here. Now when I know I'm supposed to buy it here, now where to buy? Definitely on the key levels. Now on the key levels, now what to see before buying the key levels? There you come your chart patterns or candlestick formations or whatever different strategies people have. All right, so that's the third stage. That's the third stage. Whatever, if you're following a candlestick, if you're following a chart pattern or whatever strategy you're following, that comes in the third stage. The first stage is you're setting up your price action context. Second step, setting up your key levels, key areas to trade for. And third step is, okay, now get into the trade. So that's what I say. The strategies we are more serious about, that is just a cherry on the whole cake. This is the overall cake. So you need to be more focused in here. And this cake is for price action context and your key levels. Because if your price action context is correct and key level is not correct, then again, you will enter in a wrong place in a right price action context area, right? So hopefully you'll be planning your trades with the same ideas as well. Yeah. Anyhow, at last, from 25th of June, this one, I do conduct this live training sessions, live classes for 6 weeks for once in a year. Otherwise, we just have the regular sessions are only based on the training videos. And in every year, I try to update the overall course structure, overall course content. So that's why I do the live courses. So you can just join in on the 25th June. Here you'll get all the details in here in financialhubindia.com in the advanced trading course. The link is also given in the description box as well. All right, and if you're not in the channel, we have a free Telegram channel. Then the description link is there with the link of the Telegram channel as well, so you can get into there as well. So hopefully I'll be doing some more price action context thing with you guys, because I see that especially in the Indian market, people are more interested with the candlestick formation, and people are more interested with the chart patterns and all the strategy part. Basically, a lot of messages and queries I receive. What is your strategy? What are you teaching the strategy? So honestly speaking, 20% is my strategy, 80% is my price action context. When your context is right, then even if you have a weak strategy, even that will work out, because you are on a right platform, you are on a right chart, on a right direction sitting. So I'll see you guys on the next video. Thank you so much for this session here. Thank you.